Hey traders, Dr. Barry Burns here with Top Dog Trading, and today we're going to show you an E-mini strategy. Actually, today is the first of a series of E-mini strategies that I'm going to be sharing with you. And so let's get started. And this one is one that I've been doing for a long time, years and years and years, and it's really consistent. So I just love this. It works so well. Like I say, this thing has been consistent. Consistency is so important in trading. So here we go. This is the E-minis. I'm using a 300 tick chart here. The main line here, which you'll see turns red when it angles down and green when it angles up, that's the 50-period simple moving average. We're going to use that as the line in the sand. That's the key to this E-mini strategy. And also price action in relation to it. Now I have a couple other moving averages here, so I'll just explain what they are. The black line is the 15 exponential moving average. This yellow slash kind of orangey line, that's the 100 simple moving average. And the purple is the 200 moving average. All of them are simple moving averages except for the 15, which is an exponential. So the normal thing for the market to do is when the market's moving down, for it to be going down, the 50 MA to be going down as well. When the market goes up, the 50 MA tends to go up as well. So that's just kind of a general rule. That alone is not really tradable. That's not enough to trade on. But what we're looking for is an edge. In trading, we're always looking for an edge. And we're looking for something that's a little abnormal, something that is not the typical norm. And that will often give us an edge. And certain of these things will be consistent over time, being profitable, and this is one of them. And here it is. You can see it right here. So the 50 MA continues angling up. Again, I've got it color-coded just to make it real clear visually. It's green. And yet, a price comes below the 50 MA. So here is the structure. Price bars being below an upward angling 50 MA. And now that is a signal for a long trade. So again, normally we would see the 50 MA here go flat or even turn down, but no, this time it's still angling up. And it starts out as a reversion to the mean scalp trade. So we'll scalp up, but sometimes these babies can go for a long time. And as you can see, this one turns into a very nice winner. All right, so that gets the uptrend going. Market kind of flattens out here for a little while. It goes sideways. And as you can see, now we're in our regular typical type of uptrend where price is above the 50 MA and the 50 MA is angling up. All right, 50 MA goes flat, market kind of goes flat. We're back up into a typical uptrend. And here we go again. Now we get another example of the same kind of thing. So by the way, these times down here are California times. So now we're about 40, well, yeah, about say 35 minutes back here. Wow, that's okay. It's moving pretty fast here, isn't it? All right, so we're about 45 minutes into the trading day. Trading day starts at 6:30 California time for the open of the pit, which most of the pits are closed down now. But anyway, that's still considered open outcry hours. So here again, we've got it. 50 MA angling up and price coming below the 50 MA. So what we're going to do is still trade in the direction of the 50 MA. Now, there's a couple of rules here. One is you've got to have support, and we do happen to have support here at the 100 MA. And now, sometimes that's all you'll get out of it, which is not much, right? I mean, that's hardly anything. And so I'll take a little bit of my profits here, take a little off, and basically get a break-even trade then so I don't lose money. And if the market continues up, then great. And if it doesn't, well, that's okay. At least I've adjusted my cost position where I don't lose any money. In this case, it does continue up, and we get into a nice 5-wave trend again. So that's it. Now, there are a couple other rules. Our time's running out for this video, unfortunately. But again, the primary structure, which is the most important thing, the structure of the market, is for price to be below an upward angling 50 MA. Also, you want to have support to be bouncing off of. And I also use the next higher time frame to help me. And I have some free videos on how to do that as well. So I would go in this case to a 900 chart, look for the timing as to when to expect a low on that 900 tick chart. I use a momentum on the next higher time frame. And the other thing here, of course, is that not only do we need support here, but we're going to be doing our money management, taking some profits into the first resistance area. I've got my cycle indicator on here. Obviously, there's a lot more to this. So if you want the complete rules, I do have, like I said, a free video series of 5 free videos. And then video 4 happens to go into the details of the rules of the rubber band trade. So that's it for part 1. I'll be releasing more videos on E-mini trading strategies here in the near future. So watch for them on YouTube and where other amazing trading strategies are explained via video through the trading community.